Hey guys, Brad Niccum, Nest Mortgage Group here. Another Monday update for you. I think I've got some good information in this one. That's why I'm doing one today. And I wanted to do our Monday quiz again. So here's a question for you. Which European country has the longest coastline? Here's the possible answers for you. A, United Kingdom. B, Italy. C, Norway. D, Greece. Answer in the comments section of the YouTube video, not via email. All of the correct answers will get drawn out of... all their correct answers get written down. I'll put them in a pot. We'll draw one, and the lucky winner gets a $25 Amazon card. So good luck. Last week, big news, Federal Reserve meeting. As you know, they decided to keep the Fed fund rate the same, which we knew they would. That really didn't have an effect on the mortgage market. What did have an effect was the announcement that the Fed would slow their balance sheet reduction. Instead of allowing $60 trillion in treasuries to run off each month, they're now only going to allow $25 billion. That is a bigger reduction than expected. This means everything falling off their balance sheet above that level, the Fed will be reinvesting in treasuries. The Fed is going to continue to allow $35 billion in mortgage-backed securities to fall off their balance sheet, but everything in excess of that, they will reinvest in treasuries as well. We feel that the coordination of buying these treasuries will help absorb some of the supply in the bond market and could help rates move a little lower. Another thing that happened on Friday that was a bit of a surprise, which was the Bureau of Labor Statistics, the BLS jobs report. They were expected 243,000 new jobs to be created, and it actually was only 175,000. And then in the prior 2 months, they reduced it by another $22,000. So really showing that the drop in unemployment could be affecting everything a little bit. Another part of the report was the average hourly earnings, which measures wage pressure inflation. It only rose 0.2%. Which was below the 0.3% expected. And year over year, hourly earnings fell from 4.1 to 3.9, which is below the 4% expected. So our hourly average weekly hours worked decreased from 34.4 to 34.3%. So that's a fall that nobody really was expecting out of this jobs report. In fact, we were all bracing for new jobs and higher numbers. So if you look at what happened to the unemployment rate, it actually went to from 4.1 to 3.9. And then from 3.8 to 3.9. So that is going to have more of an immediate effect on interest rates. We have seen a little bit and show up in the last couple of days with some pressure off the bond market, so maybe that will continue. A couple things that seem to really be helping buyers are the grant programs that we have, the Fannie Mae and Freddie Mac. Anybody below an 80% AMI, that's $77,000 in the Indianapolis area, the borrower gets a $2,500 grant, doesn't have to be repaid on a conventional first-time home buyer 3% down program. And then if the borrower is under 50% AMI, which is about $48,650 in the Indianapolis area, that grant doubles, so they can get $5,000 to use towards down payment and closing costs with no recapture and no penalties. So it's a great loan where somebody doesn't worry about refinancing or selling their house in the future. I'd also want to let everybody know that we have added a down payment assistance program. It is an FHA loan. It is a repayable second mortgage. The second mortgage is 2% above whatever the first rate mortgage is. So meaning if the first rate's 7, the second's going to be 9. That second's going to be amortized over 10 years. The payment will just be added to the monthly payment. So every month the customer's making their mortgage payments, they're paying the first and the second back, and they're reducing the interest on both sides and the principal on both sides. The advantage to this over your normal down payment assistance program is now when your customer goes to refinance or sell their house, they don't find out that they have this huge second that has to be repaid that's been earning interest every single month and not being paid back. So it'll remove the surprise. It'll allow the borrower to refinance when rates do come down, or if they feel like they're in a position they want to sell the house, they don't have to find out that they're actually clearing less money than what they thought after they get that hidden payoff. So it's a great program. It is a product that we have to broker. So if you have questions about it, please let me know. Nest Mortgage Group, hey, our efficiency is what we're all about. We continue to get underwriting times down 24 to 48 hours. ensuring all closings under 30 days. Pro tip, we've had a lot of success with appraisal waivers, getting them done before the buyer submits the offer. It's a great competitive advantage. We've actually won some deals because of this, and we can close those loans in less than 10 days. So we just did one in less than 8 business days, which is pretty impressive when you think about all the things that goes into a mortgage. If your buyer needs a pre-approval, remember, day, night, weekends, holidays, whatever, I'm always here to answer the phone and get them pre-approved. Thanks for tuning in. Please let me, I just want to let you know how much we appreciate the business that you guys do send. And I appreciate all of your calls. And if you have any questions, don't hesitate to ring me and ask me those questions. So thanks. Have a great night.